Hello and welcome to our market alert video for today, which is July 1st, 2022. My, another crazy week, a lot of stuff to talk about. So I want to dive in to it right away with you. And we've entitled this video, Do You Have Peace of Mind? And we believe that the right portfolio for you is the one that helps you to sleep at night. And right now, if you are invested, I would suspect that you have a little trepidation and maybe don't have some peace of mind and maybe even aren't sleeping at night. And so I want to dive right into this and talk with you about our invest and protect strategy. As you know, we have a set of core principles, investment principles that we abide by. And one of the main ones is that growth is important, but protection of principal is even more important. If you spent the last 20 years of your life or longer accumulating what you now are going to retire on, or you're already retired and you're living on what you've done that with, to see it potentially at risk right now has got to be disconcerting. And our invest and protect strategy is counter to the prevailing idea, which is that you buy and you hold. We believe you should buy, you should hold, but you should also sell. And our invest and protect strategy has told us that now is, and has told us for a while now, that now is the time to be in cash, and we are also not in any bonds either. So right now, the best portfolio we believe to help you to sleep at night is to be in cash. That's the best investment. Sometimes, they say cash is king. Now, the traditional 60-40 portfolio has experienced the worst quarter. This last quarter has been worse than any quarter in 2008. So think about that. 2008 was the second worst bear market we've had since the Great Depression. And it did not have a quarter that was as bad as this quarter that it just ended. So that's to give you an idea of what's going on right now. The bonds, which are supposed to be the counterbalance to the stocks, right? Stocks go down, bonds go up. Well, bonds have had the worst first half of a year on record. So that's the Great Depression, that's the 70s, that's the 80s, that's Y2K, that's 2008, the worst on record. Why? Because the Federal Reserve is actively raising interest rates, and when they do that, bond prices tend to fall. So being in bonds right now has not done very much to protect anybody from downside risk when it comes to counterbalancing what the stock market is doing. The other thing is, I saw a statistic which is really concerning, and that is that 8 million Americans now are behind on their rent. That's not a good statistic. Mortgages and applications for new homes are record-setting declines month on month. It's starting to unravel, and we continue to believe that the Dow could go down to 25,000 before this is all done. The Fed has to suck out all the money that it put in because of the pandemic, which is what inflated the market and made it go up as much as it is now. That's a big contributor to that. So the question I would have with you is, are you still invested? Are you looking at this and thinking, the market will come back, it's all okay? There's an old expression that says that the market can remain irrational far longer than you can remain solvent. And that's why we believe that right now is not a time for someone who's over 50, retired or retiring soon, to be invested in either stocks or bonds. So if you're still invested and you'd like a second opinion, please visit with one of our retirement planners. We'll go over with you our philosophy, where we are right now, how it would apply to you. And if we can help you, great. And if not, that's fine too. Okay, no charge or obligation either way. And we'll part friends. So take advantage of that. Go to our website, rpoa.com, and avail yourself of that. Look forward to helping you if we can. Thank you for watching this video, and be sure to share this with your friends as well. So thanks again.